Hi and welcome. My name is Jerry Slusewitz. Thanks for joining me for one of our Money Talks video casts. Professional money manager, over 23 years experience helping individual investors, helping institutional investors just like yourself get better returns on the market. It's kind of a ping pong market where it's been going back and forth, kind of getting batted around. Heading into July 1st, the markets were down 9 out of 10 days, the NASDAQ and the S&P. And then since July 1st, the markets had 7 up days in a row. I guess the S&P was fractionally down 0.17%. And today is July 14th. So it's really been back and forth which way is going to win out. But I'm going to tell you, the main thing to understand is the markets are still in a primary downtrend over the last few months. April 26th was the high. We've had a series of lower highs and lower lows going back and forth. So now we are right now on that crux of that point of that lower high number. So there's plenty of overhead resistance right in here on all the major indices. My resistance point, what would make me change my mind and say, okay, the downtrend is over, we're back into a new uptrend, would be about 2342 on the NASDAQ and 1132 on the S&P. Those are your big resistance points that if we switch back above there and test those numbers, well, and I'll update this video, we'll be back into a positive market. But really, the run-up that we had since March of 09 kind of broke at the beginning of May, and we're in a new downtrend. And if you look at the longer term, if you go back over the last several years, the last 11, 12 years since the beginning of 2000, we are in what's called a secular bear market. A bear market means a bad market that if you're not watching both sides, trading the up and the downside, and you're just a buy and hold investor, it's been a losing proposition for you. The markets are still down over 30% in the last about 3 years, and they're down around 25% or more over the last 11 years. So buy and hold doesn't work. You've got to be a dual directional investor. Currently the direction is down. We're right up against resistance points. I do think that we're going to test and have another leg down. I think that at some point in time later in the year things will get better, but I do believe we're going to have one final washout. Again, nobody has a crystal ball, no one can predict the future, myself included. So that's why we think that risk management is very important. We've had an opportunity over this 7-day stretch to lighten up if you're a long investor, if you're invested on the buy side. Lighten up your positions right now. Use stop losses because this market could go down significantly from here. I'm not saying it will. I would change my mind and become more bullish. Again, 1132 on the S&P, 2342 on the NASDAQ. It's going to be very interesting. Volatility went from extremely nervous to complacent in a matter of days. The news on TV is one of complacency and euphoria, and things are back. The earnings numbers are coming out very positive, but those are rear view mirror looking numbers. You don't drive looking out the rear view mirror doing 75 down the freeway. That's not how you do it. You're looking forward. Looking forward, lending is still down, consumer credit is still down, housing is still having major issues. The number of loans for new home purchasing, record low numbers. I know that the incentives have all gone away and that's affecting it, but we've got some major issues on our financials and foreclosures, housing, credit. Those are problems that have not been resolved. And again, this rally we had recently, I think, is a gift. I'll be very, very cautious. I think this market's going to turn down. If you want, sign up for a free newsletter. It's above my hand on that tab way up there. Free email educational newsletter. Sign up. All I need is your email address, and we'll send you our writing updates as we post them. But it's very important to understand that what we can do is manage risk. And that's what we do, is manage the risk for you to get the best return you possibly can. Just buying and holding or playing long side only is not a successful long-term strategy, especially in this ping-pong environment, back and forth that we're in. The risks are high. This entire rally has been on very low volume. There's very few traders out there that are trading this. There's no conviction to the upside, and I'm very, very dubious about it. Again, we'll update you next time. Stay tuned for another edition. If you have questions, call our office, 800-449-9501, toll free 800-449-9501. Catch me back on the radio. We're Saturday morning, 7:30 to 8 in Southern California, AM 830 KLAA, or on the web, am830klaa.com. There's a listen here button. You can tune it on wherever you are in the country or in the world, 7:30 to 8 a.m. West Coast time here in the U.S. Again, have a great week of investing.